Hi there. People ask a lot about what it means to be accredited. Like, what is an accredited investor versus a sophisticated investor or a non-accredited investor? I have with me the one and only Michael Blanc. Welcome, Michael.
Bronson, good to be here.
So great to have you here. Wanted to ask you the question because people ask this, and really, what is an accredited investor? What does that mean?
Okay, so the SEC, the Securities and Exchange Commission, defines it like this: you either have annual income of $200,000 or $300,000 joint income, and or you have a net worth of $1 million excluding your primary residence. So if you fit in that, you are what's called an accredited, and if you don't, you're non-accredited.
Okay, and what's the reason the SEC makes this distinction about accreditation? Like, why do you think they do that?
Well, so people typically, the reason they do that is the SEC is trying to protect people who don't have a lot of money, and number one, to lose, right? So if they lost a $50,000 investment, it's the only $50,000 they have, it would materially impact their lifestyle. Also, the SEC assumes that someone with more money has more sophistication and more knowledge about the investments that they're making. Therefore, the person with less money should be protected, sort of specific guidelines and compliance that not only the non-accredited investor has to buy to, but also the operator, as us, have to be cognizant of, and they are more relaxed for the accredited. Also, the accredited, because of this, partly because they actually have access to some investments that a non-accredited investor does not.
So I know it's not a gold stamp that people get when they're accredited. They don't get this, typically letter from the SEC that I'm accredited. And sometimes I'll talk to people and they're, oh, my net worth's 5 million, but I didn't know I'm accredited, whatever. But can you talk, just a little bit more about some of the benefits of being accredited and just kind of what, maybe some more information about that if somebody is accredited and why that is a benefit to be accredited?
Yeah. So for example, if you're an accredited investor, you have access to just different investments. For example, if you're a high net worth individual, you typically have a financial advisor who has access to IPOs that the average person doesn't have, as you probably know. Or they start exploring alternative investments such as oil or multifamily syndications. They're exposed to different asset classes, number one. Number two, sometimes, especially in the syndication world, some investments are only open to accredited investors. For example, if there's an investment that's 506C, it's a specific investment that's only open to accredited investors. And some are and some aren't. Most are open to non-accredited also. There's some guidelines around that. But some are only open to accredited. So if you're an accredited investor, you actually have you have an opportunity to invest in more deals. Also, some operators also prefer a higher investor amount as well. So it's not just accredited, but it's also the investment amount that gets preference. Sometimes they get preference as in they get first access to a deal. They may even get a higher return than someone with a lower investment amount. So there's advantages to having money because you have more opportunity in some way and less compliance issues as well.
Yeah, there are a lot more options if you are accredited. It's very beneficial. We're not limited to 35 investors in a deal if we're doing what's called a 506B deal, which not to get in the weeds. But so if someone is listening to this, I know we have a lot of people that are non-accredited. What's something, can they still invest in deals or are they out or what does that look like?
Well, the answer is yes, they can. Again, so there are some restrictions. The best thing that a non-accredited investor can do is become what's called sophisticated. And the reason this is what sophisticated means is that this is a person who has some education, either actual real experience or possibly academic. So you've maybe taken a course or seminar, or you have some other related investing experience. For example, if you have rental property, you have related investing experience. Now, this is important because in order to invest in a 506B as a non-accredited, you have to have what's called a substantive pre-existing relationship with the person you're investing with. So you can't just start investing with someone that you just met yesterday. You actually have a relationship with that person, and if the operator is good, they know these things, and they won't just solicit and take anyone's money. They're going to build a relationship with you, and in that process, they're going to ask you, the past investor, questions around your previous experience and knowledge. But we as operators, we don't want to take someone's money and they have no idea what they're getting themselves into. If they think it's like a stock, they can buy it and get out every single time. that's not going to work for them, right? If they're not willing to hold this, if they don't understand the illiquidity of it or how the thing works or even the risk potential, we don't really want to have that person invest. It's not right for that passive investor. It's not really a fit. They should maybe do something else. So therefore, that non-accredited investor has to almost sell themselves to some degree. Yes, I know what I'm doing. I've done this before. I know exactly what I'm getting into, and I want to invest with you. Okay, well, let's build that relationship, and I can present you with other deals. So as a non-accredited investor, you got to put a little more work into it. You can't just have a bunch of money and go, oh, I'm here. You have to just demonstrate that you know what you're getting into, and you have to be somewhat knowledgeable.
Yeah, that's really true. I think it really comes down to the issue of fit. If somebody's on a call and they were looking for 100% return in 1 year, I was like, well, that's not really what we do. And so obviously having more awareness of what multifamily deals actually return, what it looks like, and obviously being on videos and educational things like this is a way that you become more sophisticated and you make yourself more attractive to different operators, because a lot of times, especially when money is plentiful, there's a choice of taking somebody who is accredited or non-accredited. Usually you'll go with the accredited, or there'll be a certain way that's kind of siphoned out. But if somebody really is sharp and they feel like they've done their homework, we will happily have that person be part of our deal, but we want to make sure that it is a good fit. So just wanted to say to you, thank you for taking the time to join us today. It's always our pleasure to do this and to be able to answer some of these questions that come up on our calls. Please go to themichaelblank.com/report. If you have not, there's a wonderful report that compares the stock market and the returns and volatility there historically with multifamily syndication. So you'll really learn a lot if you haven't checked that out. The second thing is really to take a look at the Nighthawk Investment Club if you're interested in part of one of our deals. So we'd really love to have you be a part of our deals. Check that out. That's at nighthawkequity.com. So thanks again for joining us, and we'll look forward to seeing you on the next video.
Hey, and before you go, make sure you subscribe to my YouTube channel because we're putting stuff out every single week. Also, check out this special report just for you. It's what's the best investment, the stock market or real estate. It's going to blow your mind. And here's another video for you to check out.